Hey everybody, thanks for joining the second class. Looks like we have Publius on stage. Maybe give it a minute or two for everybody else to join. But Publius, thanks for being here.
Yeah, thank you for hosting Bean Merchant.
Of course. I guess I'll give maybe just a little bit of an intro for anybody who wasn't at the last class. These are kind of a little bit more advanced discussions about the Beanstalk protocol. The goal is for people who are in the audience to kind of go on and be helpful members of the Discord, for people who are new to answer questions, and just to kind of further your own understandings of Beanstalk, how it works, what you can do to help, etc. So please bring your questions. We can bring you on stage, or you can ask them in any channel, maybe in this discussion board channel. But yeah, feel free to type your questions or raise your hand, and we'll bring people on stage and try to get through them all. These calls usually last like an hour, and sort of everything's on the agenda. But again, the idea is asking questions about Beanstalk protocol with Publius, who is for anybody who doesn't know, the anonymous developers behind the protocol. So looks like we have 9 or 10 of us here. Let's give it maybe a minute or so, and then we'll get started.
If anyone has any lingering questions or anything that they're curious about how the protocol works, or how basically anything works related to Beanstalk, feel free to raise your hand, and we'll get you up here and we'll try to answer any questions that you have. And I do believe that, in addition, Bean Merchant has a bunch of questions to supplement here from that have been asked in other places. So anyone that has things that are pressing, feel free, and we'll bring you up here as appropriate.
Yeah, just feel free to think of questions and just raise your hand, and we'll bring you on stage. Maybe to kind of get the conversation going, though, Publius, it might be good to get kind of an update since we last spoke about kind of the health of the protocol. I think that was one of the most interesting discussions we had last time. And it looks like the debt has gone up a little bit. Maybe the pod line is maybe takes a little bit longer now. There's a lot of circulating beans. So I wonder, what are you kind of watching since the last time we spoke, and how should we be thinking about the health of the protocol?
Yeah, thank you. The best way to do it is maybe to walk through some of the charts that are currently on the website. So if you have your computer open, or have access to the website, it'll be easy to follow along. But the most important one, which is the main chart displayed, that over the past week, the price has continued to oscillate over $1. That's very exciting. In general, the continuation of the oscillation, and in general, somewhat the tightening of the oscillation in a tighter band around 1, is an indication that things are generally in a good place. And if you look at liquidity over a longer period in time, either the month or all time, you can see that liquidity is sort of approaching a local maximum, other than the major peak in liquidity during the pump in September. Otherwise, liquidity is at a local maximum, which is a positive indicator that Beanstalk is slowly building up its liquidity. And if you look at the market cap in a similar way, the market cap is slowly and steadily rising back up to close to its peak. There was a slight peak at 40 mil, or close to 40 mil, during the first day of the pump. Then it also pumped to 25 million, and Beanstalk has slowly built from around 5 million market cap back up to now almost 25 million, and holding the price, or oscillating the bean price over $1 at a $25 million market cap, which is again sort of a local maximum, is a positive indication that things are heading in the right direction. And sort of lastly, if we look at the all-time peg crosses, there is an uptick or an upward curve in the rate of peg crosses, which is a generally positive indication that the system is becoming more stable over time. And those are some of the things that we would look at that make us feel that Beanstalk is continuing to trend in a positive direction, and that's very exciting. The main thing that we want to continue to have happen is for the community to grow around Beanstalk, and the snapshot proposals over the past week, the number of them and the quality of them are very exciting. So in addition to just the pure statistics on the system, on top of that, the growth of Beanstalk farms and the team around Beanstalk is also very exciting.
Yeah, that's awesome. I of course have more questions, but I just want to reiterate, if people have, follow-up questions on any of that, please raise your hand. We'll definitely call on you, or, drop a question in the chat. Um, I guess, Publius, the other thing in terms of health of the protocol, though, is the BIP-2, which is coming up. Do you want to say a little bit about, BIP-2, what it will do, and maybe, why the changes were implemented?
Yeah, thank you. BIP-2 seems like it's going to pass. It has 59% or so stock voting in favor, with just under 2 days remaining in the vote. And to remind everyone, BIPs require a 50% vote in favor, at least, in order to be passed. And it will be committable immediately after it's passed, so in about 45 hours from now. And the immediate changes to Beanstalk are that any harvestable pods or any claimable beans or LP from withdrawals that are immediately reinvested into Beanstalk, no longer will the assets that are either harvested or claimed touch your wallet. And obviously, pods have started to harvest in larger numbers, and this will potentially encourage more reinvestment of pods into Beanstalk. If the calculus is you can harvest your pods and sell them and realize gains, or you can resow them or deposit them and not realize gains at that point in time, that could be very attractive to farmers. So both for the efficiency of the system, and this was a suggestion that was brought to us by a community member, that they thought that this would be generally a positive for farmers and something that would help Beanstalk attract uh, larger pools of capital as well, because tax efficiency is important to a lot of different investors. We take our feedback, the feedback from the community, very seriously, and we wanted to implement that sooner rather than later, and we're pleased that that is going to pass. And in addition to that, there is a minor adjustment to the weather changes. 4 out of the 24 weather change cases will be made slightly more negative, which in those 4 cases, which are when the debt is high, the price is greater than 1, and the debt level is the demand for soil is increasing or steady, Beanstalk will lower the weather more than it currently does. And that is mainly intended as the price of bean has stabilized around $1, given that at least theoretically right now, the increase in demand for beans is largely being driven by the stability, not a minor increase in weather from 2000 to 2100. It makes sense for the weather changes, given that it seems like there's going to be an excessively high debt level for the foreseeable future. It makes sense for the changes to be made such that the weather changes are slightly more balanced, so the weather isn't increasing indefinitely. Which, given that Beanstalk is starting to demonstrate utility, it doesn't necessarily need to raise the weather as aggressively. And on that front, we're also pleased that it's passing.
Awesome. Those are, I think, yeah, great changes. Okay. Oh, IPO and chill.
Oh, sorry, I just pressed the become a speaker button. I thought it would add me to a queue or something like that, but sorry for just barging in on the stage here. How are you guys doing? I just had a question about the seasons to pod clearance metrics. So over the course of the last week and a half, that's almost doubled. Just wanted to get some more input on, how is that factor calculated, and what has been moving it so drastically over the past week and a half?
Sure. Happy to walk you through that. And just so everybody understands, to a large extent, this is what class is for. So if people have technical questions, to a large extent, we want to use class to walk people through things that they're unsure of. So the best thing to do is for everybody to go to walk through the calculations with us. And we'll drop a link right now in the discussion board. Here it comes. Everyone can go to that link, which you can get to in the tooltip describing the seasons to pod clearance, and we can walk through some of this math. And I'll try to do it in as simple English as possible, because obviously there's some complicated formulas here. So, with regards, go ahead.
Not to interrupt, just to give you some context on where this is even coming from. Obviously, looking ahead, as we, as I'm writing articles and trying to create content, as we try to attract new people to come onto the platform, at least from the perspective of getting them to sow, just wanted to understand a little bit better how it's calculated, because some of the, the risk return, when the implied season supply clearance is, around a year, or, kind of rounding either up to a year, I think that case is a little bit more attractive. But, right now, when you average it out, it's a little bit more than, 2 years where someone would, earn back their pods. And obviously it's still meaningful at the given weather, but just from the perspective of explaining it to folks and attracting the kind of people that want these returns within the course of a year, that's kind of where the question's coming
from. So I guess just to get started, let's kind of just walk through this document. So the first thing to discuss is kind of how we kind of calculate the historical average beans per season. And the way we do this is, every season, the subgraph basically computes how many beans goes to making beans harvestable and goes towards the silo as farmable beans. It then basically computes kind of like a running average of what these values are for a 7-day kind of look back and a 30-day look back. So kind of looking at the form.
Hey, Publius, I think your microphone is a little bit hard for everyone to hear. Are other people hearing a lot of static?
Yeah, I am hearing that as well.
Okay, can you hear me now? Okay.
Yeah, I think that's better. Take it away.
Okay. Apologies for that. So yeah, on this page that was sent in the discussion board, let's start with the formula for computing NH. So lambda T is the current number of LP tokens at the current season. U is the number of seasons we're averaging over, which the subgraph currently uses a 7-day look back and a 30-day look back. And then we take the summation over the past 7 or 30 days of NH divided by lambda I. So basically what we're computing is the number of harvestable beans per LP per season. And essentially the ideology here is we wanted to normalize the LP to the current amount of LP. So we basically summate the number of harvestable beans per season over the past 7 or 30 days. Then we, of course, divide it by the number of seasons we're averaging over to basically get the average harvestable beans per LP per season. And then we multiply that number by the current amount of LP, which is lambda T. So essentially what we're doing is we're computing the average number of harvestable/farmable beans per season normalized to the current amount of LP that exists in the LP pool. And then basically to compute the seasons to harvestable on that, we basically determine how many pods are in the pod line. If we just scroll down to the pod APY, when we're computing Z hat F, and Z hat F is, if I were to sow 1 bean now, you would get 1 plus the weather in pods. So basically, if we add, W to D, that's how many pods will be in the pod line if we sow 1 bean, and we divide that by the number of expected average historical harvestable beans to essentially get how many seasons based at this current pace it would take for the pods to become harvestable. Now, it's important to note that this is very much so just a rough estimation, because it's based on the assumption that the amount of liquidity in the pool will stay constant for basically time, as well as the oscillation from the peg will stay constant for time. But the hope is that liquidity will not stay constant moving forward. And for instance, given this formula, if the amount of liquidity were to be increased by 20%, then as a reflection, the seasons to harvestable would decrease, so to say, by the same amount. And like we stated, this is a very rough estimation. And as everything, we can continue to evolve this APY calculation going forward if anyone has suggestions or comments.
And just to answer your specific question on the seasons to harvestable, the implication, if we go down to the bottom of this page, there's the formula for ZF, and just to reiterate the variables here is D is the number of unharvestable pods, so that's the length of the pod line. W is the current weather. And one of the members in our Discord highlighted this should actually be 1 plus W, and we're going to update that soon. And and NH is the number of harvestable pods, the number of pods that were harvested over in the formula we just described. And so the specific things that you're asking about are how does the seasons until harvestable change over time? Things that particularly influence it at this point in time is if the pod line gets very long. So over the past week, the pod line has lengthened, and that has contributed to the seasons until harvestable getting longer. And similarly, if you, and it's a little bit hard to tell if you scale out to the month, it would be great if we had a 2-week on the website, but we're not there yet. But just over the past 2 or 3 days, a period in time where the TWAP was consistently higher than 1 for more than a day and a half or so, just moved out of the 7-day range. And so that also resulted in a decrease in the number of harvestable pods per season. And accordingly, those two factors have led to an increase in the seasons until harvest.
Got it. Okay. Obviously, still wrapping my head around it, but from what I'm understanding, it's basically the D+1 plus W figure, and it's not surprising that has grown significantly over the past 2 weeks. Like just the weather alone has grown significantly. So I imagine that rate of increase is likely outpacing the rate of increase of the N to the H figure at the bottom. Is that essentially what you're saying? And that, I guess, reflects the turbulence over the last 2 weeks, which is why we've probably seen such a big change in that figure over the last 2 weeks, from like sub 10,000 to now almost like what, 20,000 at this point.
So the main reason for that is the decrease in NH, and separately, just to highlight another major influence on the seasons till harvestable or seasons till harvest is the liquidity. So if the liquidity in the liquidity pool doubled right now, that would cut the seasons until harvest in half. And so that's another thing that could have an influence. But the weather increasing at this point in time is not going to have nearly the same effect on this as the pod line increasing, because the pod line is 45 million and the weather is 2,000. So we're not on the same magnitude. And it should also be W over 100. So it's really like what the math is supposed to be is how many pods you have if you sow one bean. If you sow one bean with the weather at 2,000%, you get 21 pods. So it should be 1 plus 2,000 over 100, plus 45 million. So the weather increasing slightly at this point in time isn't going to have the same effect as an increase in liquidity or decrease in liquidity, or an increase or decrease in the number of harvestable pods per season average.
Yeah, got it. Sorry, when I meant the weather increasing, I wasn't specifically saying the actual figure in the numerator, more so because the weather is increasing, your pod line is also drastically increasing. But that's super helpful.
Yeah.
Sorry, we got to start getting people to dump into that liquidity pool.
Well, we were pretty excited that one of the members of the NFT club room has said that they're interested in sort of taking the lead on that and maybe doing like an LP side of an NFT and maybe like a winter edition and something like that gets us very excited. So that could be a good way to get more people interested in adding LP.
Yeah, so on this same topic, I think to some people that I've recently shown the project to, they've I think IPO and Chill mentioned this earlier, which was, yeah, they're saying, if it's longer than a year, because people are doing that math, they know what a season is, so they do the math and they say if it's longer than a year, yeah, it does seem like we'd get diminishing returns with the increase of the weather. If I get 20x over a year, if I get 25 or 30x. Now I understand that reading through your Publius, you had a really nice thread a little bit earlier on this. And if you could talk a little bit more about how the LP interacts, how the way to pod clearance really isn't by sowing, and it's really by more people LPing. Could you talk a little bit more about that?
Sure. So if we go back to the equation, D is the total number of unharvestable pods. So if you sow right now, that is going to increase the time, like the seasons until harvest, until pod clearance, because now there are more pods in the line. And so the more people that sow, the longer the seasons until pod clearance. Now there is some counterweight to that in the case where the demand for soil, so the sowing, translates to demand for beans, which translates to beans being minted, which does potentially increase NH, or N bar H, which is the average number of pods harvested per season. And the idea being that if more pods are harvested per season, if the denominator is growing, then ZF hat is going to be lower. So an increase in the number of harvestable pods will make the seasons until pod clearance lower. So sowing makes it go up, LPing makes it go down.
And besides something like I like the winter NFT edition. I think that'd be great, but it is a temporary solution as far as getting more people to LP. How do we incentivize? How does Beanstalk incentivize people to? I mean, I'm doing both, but part of that is me, wanting to see the project succeed. Can you talk a little bit more about the incentive structure?
So first of all, as the pod line gets longer, it will become less competitive relative to the silo. So as the pod line grows, because of the fact that that's in the numerator, that will make the seasons until pod clearance go higher and higher. And given that the weather is currently over 2,000 and there's almost 6 million soil, there's an expectation that the pod line could triple or quadruple in length to 160 million pods. And that would cut the pod APY by 75% potentially. And at that point in time, the LP becomes much more attractive. And so there's just a natural equilibrium between those rates, and there's not necessarily a rush to get all of this like a new liquidity in. And Beanstalk is in a relatively stable position. And furthermore, the main benefit of the BNFTs is to get more eyes on Beanstalk more than anything. In general, Beanstalk is really focused on attracting liquidity that is going to hang around. and it's not necessarily just about incentivizing people to add liquidity to get an NFT. And so in general, our expectation is that as the pod line continues to grow, the LP will naturally become more attractive. And separate from that, this is looking ahead a little bit, but we're also starting to think about potentially the curve integration and what that might look like, and measuring the time-weighted average being excess or shortage in both the Uniswap being ETH pool and some sort of curve pool, most likely a curve being 3 pool. And that would most likely also increase the stability of the bean price, and at the same time, the liquidity around Beanstalk.
Can I just chime in? Like, I think Dumpling, this might be helpful just because I've been thinking through some of the stablecoin market mechanics. Like, I guess it depends on who you're talking to incentivize. Like, I imagine folks who are coming in, specifically for the NFT element of this are probably more on the retail side. And, from a scale perspective, I imagine we really do need big numbers. And the folks that would likely do big numbers are likely, I think, either institutional folks or a couple of people that have been in crypto for a long time with deep pockets. Like in my mind, I when I look at the LP APY or the Bean APY, right now it's vacillating between like 80 to 100%. To me, I compare that to, well, what comparable things would someone who is siloing into Bean do? And if they're doing it from the perspective of being a saver, they're likely thinking through, okay, well, do I deposit USDC into AV? Do I, what other stablecoin type plays can I make where I'm not taking price risk, versus, staking some new Ethereum layer 2 token where, yes, the APYs may be competitive, but you're still taking price risk on the token. So in my mind, I'm thinking like the real incentive here is you get this savings deposit type product, but you're getting extremely, competitive rates relative to what you would get if you were, staking USDC or staking GUSD. So, in addition to this, over time, yes, I guess if people continue to sow at the rate they're sowing now, that APY comes down, and in a backhanded way, it makes the LP more attractive. But I think even on a fundamental basis, like what we need to be doing is, talking to and obviously we're going to be doing this a little bit via the social media stuff, but I think one route here, one pitch here is, relative to what you may be doing on the stablecoin side for traditional stablecoin, not only are these returns much more attractive, but you're also supporting a platform where you're not taking traditional stablecoin risk where, suddenly Tether comes out and says, oh, by the way, we don't actually have any collateral.
Well, thank goodness that the snapshot proposal to make you the social media manager for Beanstalk just passed, because you said it very, very well. So hopefully, as more eyes continue to take a look at Beanstalk, they also see that value proposition, and we and the community can continue to do a better job of that type of messaging.
I think that was very well put, and and thanks for the Publius. That was a good explanation too. I like sort of what you're saying is the cure for higher prices is higher prices a little bit, and I think that it should self-balance. As that makes a lot of sense, and I guess I'm not as worried now about 4,000% weather and people not being too long of a pod line and people not sowing, because that will ultimately shorten the pod line as more people LP. So
in general, the way Beanstalk works is it lets the market set the rates, but the rates exist at some sort of equilibrium, where there's either an arbitrage opportunity or some sort of pricing opportunity where you have to evaluate, in this case, the liquidity premium of silo versus field. But in general, everything in Beanstalk has similar dynamics to this, where things are supposed to balance, and over time, things balance towards ideal equilibrium, no matter how large the forces in any one particular direction, at any one particular time, or in any order are. Things like this, where even the pod and the silo and the field returns start to approach one another. This is just one example, but it's good to highlight that this is sort of an underlying ideology or meta level structure underneath the economics of Beanstalk.
I'm just going to step off the stage because I have to run. But thank you very much. And this has been super, super helpful already. Thank you.
Yeah. Take care. We'll talk soon. Just to remind everyone, if they have questions, feel free to raise their hand. This is a pretty welcoming environment.
Publius, while we wait for other questions, another thing on my mind is just maybe a progress update on L2 and stock and seed pools. I think those are mentioned in a previous call, or maybe it was the AMA. Are those still kind of the main priorities, or what's the update on the development side?
Well, L2 and stock and seeds becoming liquid are sort of major milestones to build towards. But there are lots of different things that will happen between here and there. The general idea or structure of how stock and seeds, and if we're being technical, also silo beans, deposited beans, which will also be fungible and liquid, will work, is a little bit, it's not totally determined, but it is generally ironed out. And we're happy to explain as much of that as people find interesting. The current structure in general is that there will be incentivized pools, the same way that currently the Bean ETH pool is incentivized. If you deposit the LP tokens in the silo, you will be able to deposit LP tokens for the Beanstalk, Bean Seed, and Bean Silo Bean pools and earn stock and seeds for them. And in general, we expect this will create a demand or a use case for lots of the silo beans, which currently are just sitting there. And instead, they will be used then to create a ton of liquidity for stock and seeds. And immediately those will become incredibly liquid markets. And again, stock seeds and silo beans, but it gets a little repetitive. And all of those will be fungible ERC20 tokens. Hopefully, we will also at some point be able to add the deposits and the withdrawals themselves are going to be ERC 1155 tokens, which are going to be fungible within a season. So we haven't figured out all the details on this front as much. For example, one unanswered question is when you deposit LP in a season, how to determine if, in order to make it fungible within a season, we have to set a TWAP for the season. But if you deposit in the middle of a season, which is obviously what people do, TWAP isn't determined. So there are minor details like that that we're still thinking through. But in general, stock and seeds and silo beans, that idea is almost ironed out. But there's a lot of development that has to go into that. And furthermore, that's development that will likely happen after more short-term development in the next couple months. So stock and seeds are definitely in 2022. And layer 2, which is somewhat separate from stock and seeds, but there is also a question of how does stock and seeds work on layer 2. We intend probably, and we have to have a lot of discussions with the community about which layer 2 to select, but selecting a decentralized layer 2 is probably first and foremost. We're thinking about Polygon, Arbitrum. Those two are probably the two that make the most sense that would be simple. But then we're also looking at AVAX, and that seems like it would be a little bit more work, but potentially more beneficial in the long run. Obviously, the layer 2 situation is developing in real time, and we will continue to evaluate. And furthermore, the hope is that Beanstalk will ultimately support a wide variety of L2s, and the structure of them is that beans, stock, seeds, silo beans, pods, deposited beans, soil, all of those assets will basically be fungible across whichever chains Beanstalk and the silo vote to incorporate. So if Beanstalk adds Polygon, you'll be able to tap your beans or your stock or your seeds or all of them over to Polygon and start earning your interest over there. You'll be able to cast your votes over there and trade over there, probably on QuickSwap, and if this were on Polygon at least. And there's a lot that can be done there, and that would obviously open up Beanstalk to potentially another variety of people, or potential farmers, which is good. And in terms of ordering, we're probably more inclined, at least for now, and we're curious on the input from the community. Obviously, L2 wasn't even really in the original vision, or at least the original white paper. But because the community stressed its importance, we're focusing on it. Our idea is probably to go to L2 with just beans first, before even stock and seeds are liquid. But that's also an open discussion at the moment.
That's super helpful. I'll just use this as a time as well to plug. I know you've mentioned this before, but really like high quality Solidity developers who maybe have even an economics background. I know that's something you're looking for. People have deep bench of Solidity experience who can be kind of meaningful contributors. Correct me if I'm wrong, but that would maybe those introductions might help speed up the development process for you all.
Yeah, we're definitely interested in attracting high quality Solidity developers, and we'll use this as an opportunity to reissue a call to anyone that is interested to definitely come hang out in the Discord and reach out to us, and we'll see if there's some way we can get you working on Beanstalk. There's a ton of work to be done.
And I know we're kind of coming up on the hour mark here, so I want to make sure people who haven't asked a question, who are kind of thinking about it, get a chance to. Let's just kind of give it a second. If anybody here has a question, either write it out in the discussion board. I can ask it, or please raise your hand and we'll bring you to the stage. Well, Publius, it must be a testament to your good explanations. Oh, there we go. Jay, ask a question.
Hey, you guys. Sorry for the delay. Toggling back and forth between raising my hand. Publius, would you mind talking through a little bit again? I know you've talked about this, and actually, as I look through the Discord, you guys have covered it over the past couple of weeks, the random questions and other AMAs. But just talking a little bit how Bean is different from other stable coins, particularly with MIM and stuff like that. I know we've talked a little bit about it with USDC and Tether and stuff like that, but could you just go a little bit high level again of how it varies? I know there's probably some kind of infographic out there that we have that I lost in the Discord somewhere, but if you could talk high level about it, that'd be great.
Sure. Thank you for your question. There are a couple different classes of stablecoins. So let's walk through them, and maybe this will be a good way to kind of bookend this. And it'll obviously, if there are any other questions, we're happy to take them as well. But the starting point is there's the fully collateralized off-chain model of USDC and Tether. Everyone gets that. DAI, excuse me, DAI took that model and said you can take your on-chain assets, deposit them in a CDP, a collateralized debt position, and mint DAI against that. And they instituted a stability fee so that the value of the DAI didn't approach the value of the collateral, but instead stayed at $1, its target price. And an arbitrage opportunity introduced by where if the value of your collateral falls below the collateralization threshold, anybody can liquidate your CDP and basically take the difference. And therefore, in a decentralized capacity, you can have this debt position be enforced in a way that is typically safe from losing money, not always. And MIM, to answer your question, is, and we may be oversimplifying here, so apologies if we're not doing justice to the general structure of MIM. But if you have DAI, you can mint the DAI. Just to explain how MIM works with like using DAI as an example. If I mint DAI against Ethereum, and then I buy Ethereum with the DAI I just minted, I can deposit that Ethereum in the CDP and buy more, mint more DAI, buy more Ethereum, deposit the Ethereum, mint more DAI, buy more Ethereum, and I can cycle it. And in general, MIM supports cycling and leveraging your deposit to mint more collateral natively and in a very clean UI, which is a very nice innovation. However, that is still a collateralized model and is fundamentally different than Bean. If you compare Beanstalk and Bean to ESD and DSD or Basis, which is more of an apt comparison because these are non-collateralized stable coins, there are a couple different major differences, but the main one with ESD is Beanstalk basically views solving the P is less than 1 problem. So what do you do when the price is too low? As something that really has to be answered first by what do you do when the price is too high? And so there are a couple things that make Beanstalk different than ESD, both in how it launched and how it issues supply in general, that make it less likely to over issue supply when the price is greater than 1. Some of these things include minting beans based on the price and liquidity. ESD used the price and the total supply, which caused a major overinflation when the price was greater than 1. And in Beanstalk, there's the season of plenty mechanism, which has proven itself as a good way of mitigating inorganic demand when people are pumping the price of bean when it's over $1 to try to take advantage of the inorganic demand that is sort of inherent in any of these stable coins, these algo stable coins, when the price is greater than 1. So in general, the combination of the withdrawal, freeze, and the season of plenty makes buying beans when it's raining relatively unattractive, and therefore Beanstalk can mitigate the amount of inorganic demand it faces, and therefore mitigate how much it grows in an inorganic fashion. And so an example of this is that even though the market cap of beans tapped out at 40 million during the pump, the supply only grew to 25 million. And this is taking into account the fact that the pump continued for more than a day or 2 days after it peaked at 40 million. So despite that, the supply of Beanstalk ultimately only grew to really where its market cap peaked during the second wave at 25 million, which was much more appropriate than how ESD or DSD would have grown. Now, on the P is less than 1 side, there's also an important fundamental difference between Beanstalk and ESD, or a couple really, but it all plays out where in ESD, it generally applies to DSD as well. There was a tragedy of the commons issue created by the fact that the interest rate for lending ESD to the ESD DAO was determined by the debt level of ESD, and therefore, if I am interested in lending to ESD right now, I am incentivized to wait until someone else lends to ESD because I will get a higher rate if the debt level goes up, and that created an inefficiency on the lending side, which was exacerbated by the fact that all of the coupons for ESD debt, right, were fungible, and therefore when debt became redeemable, there was a race to redeem the debt, and only the bigger players were able to successfully redeem their debt, or at least were able to do it first, and that created another major disincentive for people to lend to ESD in an efficient way. And so in Beanstalk, the combination of the fact that the weather is set for the whole season and has changed only a small amount over time makes the incentive to wait to lend in another season minimal compared to the disincentive because of the first in, first out harvest mechanism, where the chances that the pod line gets longer will likely make it less attractive in the future, even if the weather is marginally higher. And that makes it much more attractive to sow now. And that creates a more efficient market on the debt side. And on basis, they had a similar issue with supply increase based on the supply and not the liquidity. And on top of that, the basis model only supports issuing bonds when the price was below 1. And that also creates an inefficient market because it's very difficult for people to price debt if the system just went through a major growth cycle. And accordingly, the system is likely going to have an inefficient debt market over time, whereas Beanstalk is willing to issue debt every season and changes the weather every season based on the price, the debt level, and the demand for soil. And since there's soil every season, Beanstalk can get a good sense of where the market is at and make the proper adjustment to the weather. So the interest rate is more likely going to be set in a way in Beanstalk that is attractive to lend to Beanstalk immediately, whereas in Beanstalk, or at least not just immediately, in the case of Beanstalk, just attracting capital in an efficient manner and at an efficient rate.
Great, thank you.
Cool. Anybody else have any questions? Okay, if not, I think we'll probably call it here. Publius, thank you so much as always for taking the time this evening. And we'll all be hanging out in the Discord. So if you were in attendance, I recorded you. And yeah, just thanks everybody for making the time.
Thank you for hosting Bean Merchant, and thank you for coming and hanging out and asking questions. And we look forward to doing this again next week. And we'll remind everyone, if you want to resume the DAO conversation about the t-shirts and the marketing and lots of other stuff, the development to Beanstalk, we'll be having a call sometime Thursday, still figuring out the exact time. And thank you everyone. I mean, we're just so excited by the community forming around Beanstalk. So we're just very grateful for your attendance and your attention and your interest, and we look forward to continuing to just do good work.
Thank you so much. All right, bye everybody.